Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Looking at the market rundown heading into Tuesday, January 9th, the S&P 500 with a red day closing down near the low of the day. So certainly some momentum for the bears heading into tomorrow, but looking at the range of the day, certainly not a big scare for the bulls. They are still in control. The middle Bollinger Band support is 226. Make that 2261 and ascending. And as long as that level holds, the bulls are in control. This is a rejection from the upper Bollinger Band from the new all-time high. And at this point, it's normal, healthy consolidation. The weekly time frame, there's not a whole lot to see. We know we're in a bullish uptrend. The exponential moving averages are currently support. The Bollinger Band, the upper Bollinger Band, is not a factor of resistance at this point in time. So the question is going to be, can the bulls hold the middle Bollinger Band on consolidation? And as of right now, we'll have to wait and see. But we know the bulls are strong, and there's tons of individual names and lots of sectors showing strength. The biotech and the technology sector showing lots of strength, and lots of individual names among them. IWM, another move to the downside. So this key support of 134.26 is close to being tested, and we didn't break that low. The S&P 500 did break that low at the end of the year. So that is a solid level of support on IWM. And you can draw a horizontal line right there and see how long we've been holding that level. The past 3 weeks, we keep testing it. Upper Bollinger Band resistance and weakness in IWM. It is clearly the weaker of the three. And if we do break 134.26, we're looking down at previous resistance now support of 133.55, and then down to the next consolidation low of 129.75. Weekly time frame still looks like normal, healthy consolidation, and you could still make the argument that this is a bull flag by drawing it. And a bull flag is when you've got parallel support and resistance lines. We're going to do a quick job here. Certainly won't be exact, but that would be your support line, and then your resistance line, and it's coming after a bull breakout. So it is still potentially a bull flag. We'll have to see if we can hold these exponential supports. If we were to see a pullback and a loss of those exponential supports, we would look for the 4 period to cross the 8 period bearish, and we'd look for a bearish MACD cross. QQQ is by far the strongest. Look at that move. Breakout above the upper Bollinger Band, continuation, new all-time high Friday, and again today. And we can see that with the tech sector. Apple and Facebook have been on absolute fire. And you look at QQQ on the weekly, we closed above the upper Bollinger Band on the weekly last week. And currently 122.26, we're still above that level in breakout mode on both the daily and the weekly. Like I said, we're noticing some differences in the sectors. The financial sector's lagging behind a little bit. It's been on fire since the election. But now it looks like a little bit of sector rotations going on, with money coming back into the biotechs. Technology bulls never really went anywhere, but they're certainly turning on the extra jets here and hitting higher highs. And again, QQQ is more than 50% in the technology sector, so I always look at it for a reference as to how the tech sector is doing, and certainly it's doing very well. So we'll check back in tomorrow and see how it plays out. We're watching. SPY had a double bottom at the low of the day, and if we break that level tomorrow, we know further pullback is coming. I appreciate you watching. See you tomorrow.